Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Where do we start off with you guys? We spent a lot of time in today's video, and let's just make sure YouTube's working. It is, yay. I spent a lot of time doing sort of bigger picture overview kind of conversations. What do market turns look like? Spent a lot of time in the daily brief also looking at a lot of the internal indicators, sentiment measures, breadth, new highs, new lows, put call ratios, all those kind of things. Also, too, in a lot of the data that I'm seeing seems to correspond with this kind of thought that it feels like we're kind of in the eye of the storm right now. I've been thinking about this kind of fractal type image. Been talking now for like a month about, oh God, this March is going to be a nightmare, and can we get into April? And it almost feels as though like the financial markets, they crapped out, and then they got sort of what they needed. So we're all sort of breathing a sigh of relief through that. Then this is the apex of the event. And then we actually have to go out the other side, think of sort of like the eye of the storm. And from what I understand, we're now sort of in the, okay, how bad is this sickness going to hit the United States of America kind of phase. It doesn't help having political leaders come out with pretty big numbers. And, American leaders, challenging times for them, to say the least. So, I don't know whether it's really a great idea to pick any serious battles. I took a shot on a little bank stock that I thought had put in a comfortable reversal signal. Turns out maybe I jumped the gun a little bit early. It hasn't broken down yet, so I'm not really ready to walk away from the idea, but a lot of the stocks in the market are coming under pressure. And I wonder whether Brian walked into a bit of a trap on that one. But we'll see what happens. I suppose we'll get to that chart deck in a bit. So, the general theme that we sort of conveyed to the audience through the daily brief is let's just, sort of watch how price action behaves in here. Do we start getting divergences developing, which is, of course, what I wanted to see to sort of mark bottoms. And I'm actually starting to hear some, big fund managers and stuff say that. Things like, we won't see a bottom in the stock market till the S&P makes a new low. And my hunch is we make a new low, but it's on either a volume or price momentum divergence, and that actually marks our bottom. As you can see, if you kind of think that fractally type image, like chaos are here, the pivot to the downside, then this is the middle of our fractal, then we have another pivot to the downside, then back up, then a bit more chaos, and then we sort of leave the storm somewhere way over here. So it's going to be a challenging little bit, no doubt about that. And of course, I've been talking about this crazy Jupiter, Saturn, Pluto conjunct on the 5th, which you don't see here because the 5th is a Sunday. I've been thinking that that's basically what we're sort of coming down into now. With regard to your conversation, of course, I like to try and keep it relatively focused on just some basic themes. US dollar index, our fear proxy, interesting how it did pivot off the 50% level and now appears to be trying to press back up to the upside. You could argue a little bit of a fractal, a bullish fractal there just 2 days ago. So a bit of fear is coming back into international currency land, and I noticed good old buddy Euro. Market's way too volatile for me to consider trading this stuff in here. But Euro's gone and put in some bearish action. I think, on balance, this is 35% of the US dollar index. So once again, it seems to be the theme of late, straight up, straight down. Not really something I can participate in. I suppose you could have made an argument that is an inside bar failure there, but wow, that would have been a huge risk window to take. But here we go, back to the downside. And you can see the gaps that need filling in here on the euro, so it really shouldn't surprise us to see, maybe we come down and test these levels down in this area. But there is still technically that gap down there, so I wouldn't be surprised if we had to come all the way right back down. And from what I understand, Europe is really straining right now. Italy and Spain, etc. It's pretty tough going there. So moving on, as we just sort of mentioned there a moment ago, feels like eye of the storm. That's resolving now, coming down and going to test these lows on the big stocks. And, of course, oil. It's kind of funny showing on the site today the inventory builds. Clearly the inventories are just exploding with oil. There is oil everywhere. People got it in their pockets, in their shirts, sleeves. They've got it coming out of their socks. I mean, there is more oil than you can shake a stick at in the world. And Mr. Trump said something yesterday which, is not going to please a lot of people in the market. He's basically called $9 a barrel on crude. So, oh well, that is what it is. Bond market, clearly with stocks feeling a little bit under pressure here. Risk off, we watch the risk on, risk off proxies very closely. You can see risk off in yen and bonds is coming back. And there's even a premium coming back into the gold market after that pretty precipitous drop there the other day, which looks like it was almost like a textbook 50% drop. So maybe if you're bearish of gold, maybe temper your enthusiasm, maybe even look for counter-trend rallies up top. One thing that did jump out at me about the gold market, which surprised me, is we like to follow the options. And I always like to follow, panic accumulation of option positions. And I thought it was interesting. In a contract that had 181 open interest, somebody came in today and bought 9,000 contracts. that's an explosion of open interest, all right. On the $17 puts on this GOLD. So if we look at the chart, I mean, really, there's a big fat M. There's a counter trend rally into reload zones. There's a fractal. So it kind of makes sense that we would see guys saying, well, let's get ready for a real press to the downside here. So I'd be very careful in the gold market. I mean, I've been saying that repeatedly of late, so it probably sounds like a broken record. But like I had said earlier, there were some interesting gold setups that came in there yesterday and the day before. It was very difficult to step in and short against these highs. I think those people that did, they got, like I said, there is 50% level. The problem that I have here is if you look at this gold chart, it really all depends on what range you look at. But if we just look at something like this, you can see top of value is way up top, bottom of value is all the way down here against these original levels. At the very least, if you are short this, don't lose money on this trade, right? Maybe at the very least, because we've hit 50%, move your stop to scratch or something if you're still in this. But on balance, if we do start breaking out through these trend lines to the upside and there's structure, then I think we can start thinking bullish again. But for the time being, this thing has M'd out. It's pointing lower. It's just a question of where does it finally find support. So caveat emptor, do with it as you please. If we do hit this absolutely insane chaos level, then that means that we have to zip all the way back down to the bottom of the range. I don't know whether that's a realistic trade to throw on and just, this is where I'm going to take profits, that's it. Markets do gyrate all over the place. I think the absolute least, if you did strap this on, just don't lose money on this setup. And maybe consider paying yourself a little bit on that 50% level tag. And, this is a good commentary of a trader's life. You just don't know what the hell's going to happen in this world. I personally am a bit surprised that we have gold pointing lower, but at the exact same time, we have bonds pointing higher. Bonds did not break out to a new high, did they? Maybe they did, maybe they didn't. 182.5 and 182.14. Oh, okay, so no breakout to new highs. Maybe this craps out and completely collapses. I don't know. But I was surprised to see that this long setup idea is still just working away here. Go figure. And it's just a trader's life. If you trade the bot, then you're long the bonds. If you trade double top breakdowns and reload zone range trades, you're short gold right now. It's just, really it's up to you and your trading plan. Bonds still pointing upish, but I could see if gold really craps out here, I could see the bonds have to cool down. As I had told you earlier, went and bought this bank stock yesterday on the railroad tracks. Interesting to see they brought the market right down against the railroad tracks bottom, and it's holding in here for now. We'll see what happens here. I'm going to risk against this though because this is the original W. If I get busted out, I get busted out. It's a trader's life. It sucks. It's just the way it goes. But if anything, great demonstration. Brian will demonstrate how to lose money slowly, drip by drip by drip by drip. Maybe every once in a while I'll make some money. For whatever it's worth, we are following things like day trader plans on the site. And we did actually have a very successful little day trade come in on the Dutch stock market here. Our battle stations trade. So in this particular case, it was just a nice model. We said W's on RSI through 50 lines with W's in price on breaks above 50 SMAs. That's a buy signal. 2-to-1. In this particular case, we were shooting for this entire gap to be filled in. It's interesting how we got right up to that candle body low and basically failed right at that level. Yeah, also interesting too, when I painted a little chaos level, it projected this target here, and gee whiz, that's where we stopped. What I do like about applying bot trading rules is this is a great analogy of, hit 50% of your profit objective, best not to let a winning trade turn into a losing trade. If you hit 66% of your profit objective, well, now you can start thinking about locking in profits. In this particular case, just using market structure and a close below 13 EMA. In this particular case, we had identified this as a level. Market moved higher. Said, all right, we'll move our stop below this recent low. And sure enough, boom, we were stopped out here. So not a bad example of just a trader's life. Just rinse and repeat. On to the next one tomorrow. As for the corn, we've been sort of musing with you guys here recently. Is this a consolidation which sets up a continuation move higher? Or does crypto and Bitcoin have to follow the rest of the risk assets and we dump back down lower? And I had sort of said to you recently that I really didn't want to call bottoms on Bitcoin unless we actually started seeing divergences. Keep in mind, this is a lower time frame chart. On the broiler chicken show and stuff like that, usually, I talk off of these bigger charts. I think you can clearly see on the daily basis, we just carved out an inside bar failure through 13 EMA. So that's a bearish sign. Same thing on Ethereum and same thing on Litecoin. We also pointed out recently that we have these sort of very solid candle body lows right across the board on these Litecoins that are a little bit higher. So for the time being, I do like the idea of this being a nice consolidation range. If we lose these lows, then clearly big M's are developing, and we should at the very least expect reload zone tags going forward here. So I think we're in that process now of seeing whether these lows are for real or not. And if we look at sort of like a 4-hour chart, this kind of conversation I had with the kids today, if we think about sort of that fractal in the stock market kind of thinking, what does that fractal look like in the corn? This has been sort of my anticipated pivot on the 3rd. I just took like literally a replication of this range and then just mirrored it, think fractal, and it sort of suggested a path similar. You can see, it's not exact, but we have followed along it fairly well, and it's looking for some sort of pivot through this event window here. I do like a counter trend rally following the 3rd up into these 50% rules. I would say, though, in the short term, as I had sort of pointed off of the medium term charts, these levels in here, if we M out and lose these levels, that's going to be very structurally bad. Ideally, if you are a bull, you would just like this thing to settle down in this range, paint 3 higher lows, and then we can start thinking trend continuation up. But for the time being, I have, remember, MEX went to a new high here, so I have 1 low. We're now in the process of testing the low a second time. If this can hold and we W, then we can start thinking about trend line breaks to the upside and actually getting bullish again. So big hurry up and do nothing right now for me. It's been that way, ironically enough, basically through a good portion of this move. I do know there are some traders that were kind of like, hey man, I'm going to short that M top there. Great, good job. We also had a nice little counter trend rally into reload zones. I had sort of said that if I got a nice little M up here, I might join you. I didn't, jerks. So I'm still sort of just sitting on the sidelines. Nothing's really set up crystal clear for me here right now, and I'm still thinking downside pressure, and especially if the stock market starts unraveling and we get into that risk kind of thought, then I could see the corn have to take a bit of a pause. So. Okay, everybody, I think that's basically your market recap here. I did have a couple of altcoin ideas that I like to talk to you guys about here, but there's nothing really going on. You can see the perp index is now on this hourly basis rolled over, so we're probably going to come back down and test these lows. And it was interesting, here's, on the higher time frames, love the look of these things. Nice. But on the lower time frames, you can definitely see the trading range. This just happened to be an example. If you see the market break out through this W here on volume, hey, rock and roll. You're probably going to see the shitcoin perp break out through this W, rock and roll. But as it stands right now, we're just basically just going sideways. And that's sort of how I look. It's ironically enough, it's actually a lot like the stock market right now. Just going sideways. We're trying to figure out, is this really a bottom, or do we have to roll over and go down and test those lows again? Okay, everybody, I think I'll leave the broadcast at that. Hope you got some value out of it. All the best, and bye for now.